Good afternoon, traders. This is Christian Fromert, CEO of the Tribeca Trade Group, with your weekend video. And we'll talk about some things to watch for this week. A lot of things going on. We got a big earnings week this week. So I'm going to talk about that and kind of get you ready for the week, talk about my market view. But I'm going to start this video off a little bit different, and I'm going to talk about a particular example of aggressive option activity and kind of how to use aggressive option activity in your trading, something that you don't hear too much about. If you're on Twitter or if you're on financial media and you hear so many traders talk about aggressive option activity, and they don't really talk about how to manage the trade after that. So there's always, there's a lot of people who will talk about after moves already happened. They say, oh, great, there was option activity a week ago in this name, and they're doing a little bit of a victory lap. But not every trade works out as profitable. So a lot of people will only talk about winners on Twitter and what happened. The ones that they mention where they talked about aggressive option activity and they don't work, you never hear about again, right? So people just don't talk about them. So I want to talk about a couple examples and one particular trade that we saw from last week in DBA, the agriculture ETF. So first of all, what is DBA? Maybe an ETF that you've never heard of. It's a basket of agriculture futures. We sent out a note back on July 3rd, which was talking about some big moves up that were happening in a couple different areas, such as wheat, soybeans, corn, sugar, and a couple different other areas. So you can play these individual markets one by one in futures. There's actually an ETF that is a basket of these futures that I just mentioned. So kind of puts them all together and is looking for, to see how these kind of move together, right? So what did we see last week? We saw what appears to be a buyer of 35,000 of the DBA January 20 calls. So why do I know this is a buyer, or why do I think this is a buyer? Because a lot of the contracts went up on the ask or above the ask, which usually indicates that somebody is buying. So this gives us a leg up. So if you like this ETF, it's this signal or this volume on the January 20 strike will tell us that there's probably going to be more liquidity on this particular strike going forward. This is not an ETF that sees a ton of option activity. So in this sense, it makes sense to kind of stick with where there's a lot of liquidity, which is in this January 20 strike. It also tells us that someone is putting down a pretty decent chip, and they've probably done a little bit of research and they're thinking that they wanted to go out to January, so a little bit longer term, than a front month option, and they picked the January 20 strike, right? So that's what we know from this trade. So now it is up to my job, which I did take this trade last week. So I got in this trade for 91 cents last week. So now it's my job to manage this trade, right? Because we know that basically what could happen from here. Either the call buyer is going to be right or they're going to be wrong. And that's as simple as it gets. We see a lot of trades that end up being winners, and we see a lot of ones that end up being losers, which I'll give you an example of a couple of them. But so it's my job to kind of if it goes this way, if it goes the wrong way, is to limit the loss, right? In trading, we want to limit our losers. We want to have small losers, and we want to have big winners. We want to let winners run. So 2 levels to watch here. First, on the downside is, so we look at this chart, and one of the things that I notice, especially, if you're not in this trade already, what I would be watching for is a break higher of 2017. That's that red line. That's the top of value. Also, I've got a lot of indicators on my charts, but basically the 2 that I want to talk about here are that top of value, which is the red line, as well as this white line, which is the 200-day moving average. I really like it when I've got several things that line up together. So, to be conservative here, I would say, a move above that 2017, which is a little bit higher than the 200-day moving average, right? So if you're not in this trade, I think that's a great place that I would initiate along. On the downside, I would watch that yellow line. That's the point of control. That's where a lot of volume has taken place in a previous time frame. So that could be your support level. Notice that's also this purple line, which is the 50-day moving average. Again, two indicators lining up as one. So below 1980, personally, I would bail. That's my stop. Now, if that happens to me and I get out of the trade, what I would do is I will set an alert back right above that red line at 2017 for reentry, right? We don't know if this thing breaks below 1980. I don't know where the price is going to go. Maybe it goes all the way down to 1933, but in this event, it'll be a small loser for me. So again, you want to be disciplined here, and then I could wait until we actually get the breakout, which is 27, which would be 27, which would be, move above there, which would become your new support. All right, so that's it. That's as simple as it can get. We've seen a lot of good trades. NRG was a huge winner last week. GPS, there was weekly calls last week. Those were big winners. Where have other option activity trades gone? In the last couple months that have not worked. I talked about a couple that have worked, a couple that have not worked, which we've seen all kinds of call buying in the last couple months in energy names. Right? You don't hear anybody talking about all those aggressive options that went up, all those aggressive calls that went up in both single names in the energy space and in the ETFs, right? So those trades everybody forgets about, but those were losers, and those were people who bought aggressive calls in those spaces, and most of them, I would say the majority of them, ended up being big losers, right? So you have to have another plan. You have to have some other criteria and a plan that's going to get you out of trades that are not working, other than just following option activity, right? I mean, that's a recipe for disaster. If you're going to stick in trades all the way to the end, you're going to have a lot of big losers, and it's going to be difficult for you to generate profits over the long term, net profits, that is, right? All right, so that's just quickly how we use option activity in the Tribeca trade room. We look for signals, we look for ideas, but then we manage the trade as our own, right? Nobody's going to tell me that the trade's not going to work. Okay, so spend a little bit of time on that one. Okay, so what did we get last week? We got a huge global rally, right? If you look at the performance last week, SPY was up 1.4%, Qs were up huge, up 3.2%. Now, if you look outside the U.S. borders, which the financial media does a very poor job at, there was a huge global rally last week. Emerging markets were up 5.6%. So if I drill down to my performance sheet from last week, and we'll start with emerging markets. So one thing that I have in before I start with emerging markets, my watch list, I have 40 different names on my international watch list. They're both countries and regions. I will tell you that 39 out of the 40 names were in positive territory. The only one that was in negative territory was Vietnam, down just 10 basis points. So why am I going through this? Because that was a full participation week. We very rarely see something like that where you've got. I mean, look at how many names were above 3.5% last week, right? We got Brazil, a lot of the emerging markets: Brazil, Turkey, China, Russia, Mexico. South Korea was all up over 5% last week. Just huge performance last week. If we look at what happened in the U.S., now I've got China Internets in here, which is kind of it's tough to either figure out whether you want to put them internationally or on the U.S. list, but I put them in sectors on my sector list because they are all ADRs that are in this basket. Or the majority of the names are ADRs in this basket. So huge, up 6.7%. You also had a lot of other areas that were all up over 3% for the week, including tech, including solar, including steel, metals and mining, all up, just really big performance, much better than the S&P last week. So you kind of have to take this. Now there was a couple of underperformers. A lot of the banks underperformed last week. Some of the defensive areas, such as telecom, they also underperformed last week. But still, the reason why I'm spending a little bit of time on this is because we don't normally see this much of full participation. You have to ask yourself, once we have a really big week, like this, is it usually followed by the same performance the next week, or do we see a little bit of profit taking or a little bit of consolidation? So just kind of makes you think what we could get next week. All right, so let me go to the beginning of my newsletter, which, by the way, all Tribeca Trade Group subscribers get every weekend. So a couple observations that I kind of pointed out here, 8 different things. We talked about the full participation. We talked about emerging markets up huge. One point that I didn't mention was what happened in ETF fund flows last week. This was a little bit different than the previous weeks where we saw outflows. In the U.S., we saw a lot of money being rotated around as money was leaving. But last week was different. We saw $1.8 billion, so pretty strong inflows and different than what we saw in the previous 3 weeks. Also, from a technical standpoint, a lot of U.S. sectors, indices had nice MACD crossovers on daily charts. For example, on Thursday, again, this is really rare when you see an MACD crossover on a breakout. So we saw this MACD crossover on Thursday, and then Friday we had the 52-week high. SPY was a little bit late, in terms of seeing that buy signal. Qs had that generated earlier in the week. I think that was basically Tuesday, and then kind of a gap up in the Qs. Same thing with a couple of the different sectors, semiconductors, SMH, a lot of inflows going into SMH. Bring up my inflow so you could see the money. A lot of people don't have these indicators. This is on Bloomberg. It allows you to see the actual money being put into fund flows and inflows into various ETFs, right? So you could see this in SMH, all this money being added on the dip. Same thing in Qs, which I'm going to get to as well. But you could see a little bit towards the end of the week, a little bit of profit taking, but a lot of inflows going into some of these areas in the beginning of last week. So you got an MACD crossover there. You got an MACD crossover in technology, again in the beginning of the week. Even consumer discretionary, you could see that just materialized on Thursday as well. Some of the other areas that were strong prior to technology kind of joining the party were industrials. Look at industrials had this MACD crossover. I think that was actually the week prior, right? Same thing I think in the transports, which have been very strong as well. Transports, with the MACD crossover, was all the way back here towards the end of June. So, we got some hints prior to what was going on in technology that there was a lot of strength in this market. So where are we now? That was last week. One thing that I've noticed is that the VIX has gotten to a very low level, right? Very indicating a lot of calm in this market. A 959. Anytime the VIX gets this low, we could take a look at the VIX chart and you could see that sometimes it hangs around here for a little bit. But I've noticed anytime we've gotten below 10, sometimes it doesn't immediately happen, but we do get a little bit of a spike up in volatility. So I would be cognizant of the calmness that is in the market right now. I would say that we're almost priced for perfection. I don't think that is a huge conclusion to make right now. If you look at the fear and greed index on CNN, it's a 64. 1 week ago it was a neutral 49. So it's getting pretty euphoric out there, considering that VIX, considering that fear and greed index. So next up on the list of observations, earnings season has arrived, right? We saw that, Friday we had a few of the banks report. I did not go long any of the banks. I sent out a tweet about that on Thursday night. I said, I have not played any of the banks for earnings. I had my reasons for that, but so far so good by not doing that. So I talked about that in the trading room, and I talked about that in another video, so I'm not going to go into detail about that. Also next week, it is monthly options expiration as well, so we may see a little bit of that. Could be one reason for a little bit of volatility for next week. What to watch next week? We've got also China data that comes out. So this is, I believe, Monday night, where we get GDP, retail sales, industrial production that's coming out there. Look at the lists. I think this is the biggest event for the week. Netflix, here's the list. It just kind of goes on and on and on. So what does the market do in option? What does the overall market do during option season? So I've noticed this before, and it doesn't always mean that history repeats itself. But you could see back in 2016, I kind of just focused on been on 1 month, which is where we kind of start where option season started and where it ended. And October of last year, we had chop. What did we have in January? We had basically chop. We kind of climbed at the end of earnings season, very similar to what we did at the end of April as well as earnings season wound down. But you could see for a good couple of weeks, we had chop, right? So I would expect that as well. I'm not trying to make a prediction, but we don't know how earnings season is going to go. I think that we're going to the earnings season needs to be pretty good, like it was last. If it was similar to how it was last quarter, which I view last quarter as very good, I think that equities can continue to trend higher. If we start to get some misses, the rally may start to falter a little bit. So we really have to pay attention to some of the names that have continuously beaten earnings the last couple quarters. Not so much the names that continuously miss, like your IBMs of the world, but your stronger names. Your Google, your Facebook, your Apple, right? And some of the other sectors as well. UNH reports next week. That's been a nice outperformer in past earnings. So you want to concentrate on some of the bigger names and kind of see how we do in the first week. One of the things that we know is going to happen, right? So we don't know how this earnings quarter is going to shape up. One of the things that I could tell you for sure is that the company buyback plans, buyback programs will be in quiet periods. They'll be shut down, which is also a contributor to chop, right? You don't have that underlying bid in the market that's been going on through normal times of the year. Right, so this is a great place, I think, and we'll be going over this in the trading room next week. Maybe selling a little bit of out of the money call spreads in the major indices, and then we're going to be focusing on single name stocks, next week. So, I'm not going to go through my whole entire newsletter because this videos are already gone 17 minutes. But this is what you get in terms of our weekend newsletter. So all of the subscribers of Tribeca Trade Group get this every week. One other thing, since I talked about fund flows and I talked about the inflows into U.S. equities, kind of where they landed last week, you can kind of see the tables here. A couple other things that were notable was fixed income ETFs, $5.3 billion. So that actually was pretty large inflows. They dwarfed the equity inflows last week. So where did the money go? So people think fixed income, they're like, oh, wow, they went really for safety plays. No, not really. The corporate bond ETFs actually saw the biggest inflows last week. Both LQD, which is a corporate bond ETF, as well as your high yield bonds. So, you could see this actually covered, I think it was I believe it was almost $3 billion last week. If you add in, you can see my spreadsheet over here, which tracks all of this data, and I'll give you the exact number. So if you add up, it was a little bit. It was actually $4.8 billion of the overall headline number of 5.2. So there was some inflows that went into some treasuries, but the majority of the inflows went into corporate bonds last week and a lot of high yield bonds. And then the other point from last week's fund flows is we talked about the VIX already, but this has been a pretty good proxy. Not that I want to go long UVXY, which I certainly don't, but it's a good gauge of sentiment. So there was some inflows going into the levered VIX ETF, and there was some money taken out of the inverse VIX ETF. So that's kind of I would say a little bit bearish sentiment that somebody is looking for. They're positioning for an increase in volatility, right? So that's just what the numbers are showing us there. So Qs, I talked about this. I'm just going to go through a couple of the sectors for the week. We already went over that DBA ETF. Qs. This is also getting, I think, a little bit euphoric at this point. We saw a lot of outflows. which was a contrarian buy signal. Now we saw 7 consecutive days of inflows, right? So, how much further can this continue? After 7 straight days and $5.1 billion of inflows. So you want to be a little bit mindful of this. That increased the whole overall size of the queues by 10%. So a lot of money being added there. Emerging markets. So, I've been advocating, talking about emerging markets now for months. So I am giving myself a little bit of a pat on the back here. Sorry to do that, but I've been long these names, for months now, and it's nice to see trades work out, right? So this is in my cash trend systematic portfolio that, again, members get to see all entries and exits. They also get to see how the portfolio is performing real time. So, I've been long EEM, I've been long IDO, which is the Indonesia ETF. I recently got long both small cap Brazil on the dip and small cap India on the dip. And then I've got a couple other longs in the space as well. So, in this trend portfolio, if you know a little bit about trend following, there's not much really to do here. There's for me to kind of manage. If I get a sell signal if things start to break down, that's my trigger to sell. But until then, you can't really predict. Again, in trend following, you don't want to predict how long the trend is going to last. You basically just want to ride the wave. So I'm riding the wave right now, and in the emerging markets rallying. That's the only thing to really do right now. And again, this is a cash portfolio, not options. Options would be a little bit different. Options, of course, you have to deal with expiration and things like theta decay. So you do have to take profits a little bit more aggressively because you have to deal with those things. This is cash that I'm long in, so I'm riding the wave. XME, so a really great signal a few weeks back in the metals and mining. I look at a lot of daily charts. I also look at weekly charts. Weekly charts are really good for showing you the bigger trend. What did we see in terms of XME? XME kind of broke down from the highs a little bit, and for a good couple of months, it was going sideways and with no clear signal. Notice that we never broke into the yearly value area. So real nice support at 2801 that held beautifully. And now we've got a nice bullish engulfing candle that surfaced last week. I'm also watching for an MACD crossover, which looks like it's imminent. XLE, I talked about how poor energy aggressive option activity has been in this place. I don't take a lot of counter trend trades. For an investment, I don't like XLE at all, but possibly for a trade, you're looking at a double bottom. They actually talked about XLE and energy on the CNBC Fast Money show. So, this is a little bit about what they talked about. For me, on the upside, I don't want to do anything in this space for a trade. Definitely not for an investment, but not for a trade until we get above 66.08. That's, again, two things are lining up there. The 50-day moving average, which is this purple line, basically acting as a good downtrend line, and also the top of value. So I'm not going to do anything until I see a breaking of that. If that happens, I've got a built-in target up here right around $60, $68. That's a VPOC, Virgin Point of Control. So, maybe a $2 move is what you might get here if we can break a little bit higher, but again, remains to be seen yet. We need to get over 66.08. So I also put together some analysis on EUFN yesterday, so I've got a whole another video on that. If you want to see what's going on in European financials, you could take a look at this report. You can copy and paste it. You could also catch it on our website, which is over here. So again, TribecaTradeGroup.com. You could see, take a look at some of these. If you haven't tried our services before, you could see some of the trade ideas that we've put out. And I think what you'll see here is that the analysis has been pretty darn good. So market posts, you could go and you could check out EUFN, and you could see some of our other posts. And then finally, I want to tell you about the offer that we have right now. So you can get all of our services for half off the first month. So we charge $129 a month, but you can get involved. Check it out for half that, $64.50. Not only will you get all these things listed here, which is an awful lot of services, you get our daily. You could be a part of our of our trading room. You could be a part of our Slack room as well. So besides that, we're going to be going over all of the individual plays for earnings coming this week. So what a huge value you get. I'm not going to charge anything extra for that, but a lot of people are starting to look at, like, which we do. We use options and the implied move for options to put on some aggressive plays for earnings. So we're going to be doing that. We'll probably look at 3 or 4 names a day and do some analysis there and figure out which ones we want to go long, which ones we want to go short. So you could capture all of that by signing up for $64.50. Again, make sure you use the coupon code TTG to get that 50% off. So thanks for watching this weekend's video, and hopefully I'll see you guys in the trading room. Thanks very much. Have a great weekend.